It doesn't look like there's a lot of attention on Shiba Inu right now, right? The trading volume is relatively low. It's constantly low. The price is rather declining. It doesn't do any great moves. But YouTube tells me differently. YouTube tells me that you guys are searching for Shiba Inu quite a bit. And so I went ahead and I made a backtest. I made a simulation of buying and selling Shiba Inu, trying to find out what historically would have worked the best for trading Shiba Inu. So how can we buy low and sell high? What's the kind of approach that would have worked in the past that could potentially work in the future as well? So without further ado, let's jump right in. Hi. So meme coins such as Shiba Inu or Dogecoin, they work in very specific price patterns, right? When we look at the charts, we can see the price usually shoots up, and then when there's no attention on the coin, it tends to bleed, right? Then there's another rally very quickly, then it tends to bleed, right? We see this pattern pretty constantly. This is Dogecoin. Let's look at Shiba Inu. We've pretty much the same thing. It doesn't look as obvious here on the chart because we don't have as much history. For Binance, Binance took quite a bit of a while to list Shiba Inu. This is what we see when we include the DEX related price data as well, right? Before there was a listing on a centralized exchange. So we always see these price pumps, then a bit less attention, then again a price pump. And we really don't want to be in the coin when it's bleeding that much. So the usual strategy, as in buying and holding, as one might do for Bitcoin, it doesn't work that great for meme coins such as Shiba Inu, right? We see a drop here from the top of roughly 70%. Of course, we see similar drops in Bitcoin as well, but still, if we can somehow avoid this, it's good to at least attempt to do this, right? This is the drop in Dogecoin, 80%. Is there a way to get in early when the rally starts and to also exit early when the rally stops, right? And when it continues to rather bleed versus the US dollar or versus the entire index. Now, one thing we can do is we can trade according to moving averages, right? Moving averages is a technical indicator that tries to balance out the price movements, that tries to smoothen it to a certain degree. And when the price goes above the moving average, we want to buy, because this is when positive price momentum starts, right? Let's look at this here in Shiba Inu, right? We are above the moving average. That's when we want to be in the market. Once we are below the moving average, the price tends to decline. And so that's one strategy. The question then is, what's the best duration of that moving average? Because when we look at this, we can set this within TradingView. How many days do we actually want to average out? Do we want to take more days, as in be a bit less reactive, but then potentially also have less bad signals, right? Let's say we take the 45-day moving average. We would have entered here. We would have held all the way up to this point. So a 500% gain. And then we would stay outside of the market for quite a while. Because you don't necessarily want to do these kinds of trades, right? Where you enter here and then exit here, lose a little bit of money, also incur some kind of trading fees, right? Depending on what you have set up. So you want to minimize those bad trades over here while maximizing the gain you get from those rallies. When we are shorter in this duration, right? Let's take a shorter period. Let's maybe look at the 10-day moving average. Then we have failed signals over here, right? This is direct cost to the performance, but we do also exit way earlier when the price tends to decline, meaning here we would have gotten an 800% increase. And so when using this approach, what kind of duration should we take? It's not that obvious to decide, right? We could just like eyeball this, but a better approach than just eyeballing this is, I think, to backtest this actually, to try to simulate what kind of a duration, of a moving average duration, would have worked the best for Shiba Inu, historically speaking. And so what's the answer here? I've run the backtest for all the moving averages from the 2-day up to the 52-day simple moving average. In black, we see the buying and holding strategy, right? So this is what you would have gotten if you just bought and held Shiba Inu during the testing period. This was the period since the launch of the coin on Binance, right? So when we look at this period, these somewhat shorter time periods, they tend to outperform buying and holding. Once you go too long on the moving average, you tend to underperform buying and holding. So of course, it's hard to say that the exact same moving averages will again work in the future. But as a rough gauge, as an approximation, it might work to a certain degree, right? So the best moving average, this by the way is the annualized performance, right? The performance per year, not the performance since start of the backtest. The annualized performance of the best moving average is over here. It's more than 900% per annum, and the duration is the 18-day simple moving average. Okay, so these are all the back tests, 2-day to 52, the 18-day is the best. And so let's adjust the chart here. Let's adjust it to 18 days. This is in the end what we get, right? We would have been outside of the market during the bearish times. We do sometimes get bad signals, but overall, we would have stayed during this massive rally in October and November of last year. And then most of the time we would have been outside of the market during the recent decline. Now, how does the result look in practice for that backtest? So what I've simulated is 0.1% trading fees, right? When buying and selling, that's what you get with Binance. And I've simulated to also bet on falling prices in case the price is below the moving average, right? So what we see here when we zoom in, during the massive rally, we were in the market. During the decline here, we actually gained money, as in our portfolio moves the exact opposite direction to the price. The price here is in white, of course, and the portfolio line is in green. So 10,000 US since Binance listing with that strategy would have turned into 100,000 to today. So right now, according to the strategy, we would rather be cautious, right? We would wait for another breakout. Sometimes we do make money doing those small fluctuations. Sometimes we don't. Currently, it looks like we should rather be on the sidelines. Now, this chart here is a linear chart, meaning you see here 20K, 40K, 60K. You can also look at this on a logarithmic scale, which usually is more useful for crypto because the price moves are simply so massive. And so when we toggle this to the logarithmic chart, this is what we get. So this is, I think, a very nice illustration why the strategy outperforms. During sideways movements, we pretty much perform the same. Sometimes we are above, sometimes below, buying and holding. During bullish times, we get all of the gains. And during bearish times, when we bleed, then the strategy tends to outperform just buying and holding Shiba. Now we can look into this in a bit more detail, right? We can look at, does maybe the exponential moving average work better, or maybe the double exponential moving average? If you so far enjoyed this video, don't forget to give this a like though. It will help the channel grow and that means a lot to me. Thank you. Now, what we have looked at so far is the simple moving average, right? So just the average price of the data points that came before. We can also look at something called the exponential moving average, where we have some kind of a recency bias. So we take more weighting on the recent price data versus the data that's further in the past. That's kind of like an idea that you want to be more reactive to the price movements, right? So when the price tends to fall, maybe an exponential moving average can rise quicker. It takes the recent price data more into account, so we would exit and maybe avoid a little bit of that decline here. The exponential moving average we can also simply add in TradingView, right? We click on indicators, we enter exponential moving average, click on that, and then we get the line. So here in red, and the results of the exponential moving average are over here. So we can see the simple moving average for the very best duration outperformed the exponential moving averages. The duration for the exponential moving average is shorter. So the best exponential one is the 10-day. And we can also see when we just look at the number of moving averages that outperform buying and holding, it's also less, right? So there are more simple moving averages that outperform buying and holding than there are exponential ones. So really, when deciding between the simple and the exponential moving average, when only using one of them, then the 18-day simple moving average, the 18-day SMA, seems to be the better bet. Now, for completeness sake, let's also look at the backtested charts. So this is for the exponential moving average on a linear scale. This is the same chart on an exponential scale. So pretty much comparable to what we have seen with the simple moving average. The simple moving average went a bit more in the negative here before the rally. It then started to outperform in November of 2021. The exponential moving average didn't underperform that much. It also started to outperform since November of 2021. The difference here, right? The difference here is the sign for the outperformance. So here with the simple moving average, we are at pretty much 100K. With the exponential moving average, we are slightly below that. Now we can go even more complex with this. We can look at something called the double exponential moving average. The calculation of the double exponential moving average is a bit more complex, but again, the idea is to accelerate the adaptation to the price. Now here comes a very surprising result. Here is the result of the double exponential moving average, this time in yellow. So simple moving average in green, exponential moving average in red, double exponential moving average in yellow. And the double exponential moving average does outperform the simple moving average, right? The best one is over here, meaning the 15-day. And we can also see almost all of the double exponential moving averages outperformed buying and holding. Almost all of those data points here are above the black line. So that's good, right? Pretty similar shapes, right? When we are too short with the moving average, we tend to underperform, probably also because of the trading fees. Once we go too long, we tend to underperform, but that's not as bad for the double exponential moving average. We even have quite nice moves here, for example, for the 41-day. So if you want to get a bit of a longer time horizon, one might even look at two different double exponential moving averages, the 15-day and the 41-day. Now let's do that, and let's also remove the simple and exponential moving average because the price chart does get a bit messy here. So maybe first the slower of the double exponential moving averages. Quite interesting, right? We also would have stayed in the market during the rally. We don't have as many failed signals here. Of course, we do get more failed signals with the shorter term double exponential moving average, right? Still, we would be bearish on both of those moving averages at this very moment, so we would need to wait for a breakout. Still, in the grand scheme of things, this is a pretty massive outperformance, right? If we look at the numbers in detail here, the best double exponential moving average would have given us 1,177% per annum. So that's quite nice. That's way better than less than 200% per annum, right? 200% per annum is still a lot, but nobody knows if that performance will still continue in the future, right? So Shiba Inu is already relatively large. You do want to time the market. Historical performance is no indication for future performance, but we can derive patterns from historical performance. At least that's what this strategy is built upon. And so in the end, it's up to your time horizon what to exactly choose here, right? Do you want to be rather passive and just take the 41-day double exponential moving average? Or do you want to be a bit more active, take a shorter duration on the double or maybe on the simple moving average? That's also a valid choice according to the simulation. Now, this is not the first moving average that I've backtested. I've backtested quite a few cryptocurrencies, and it's hard to keep track of all of this, right? When does the price actually go above or below something? Looking at this for every single cryptocurrency every day can be quite time intensive. So what I've done is I've made an alerts channel. I've made an alerts channel for the premium members, which automatically sends messages whenever historically important moving averages get crossed. So you don't have to monitor this for every single asset anymore. You can simply directly react upon this by looking at this channel. The channel isn't for free though, it's part of the premium membership. So the link to that membership is down in the video description. There is of course way more to discover, right? A lot of exclusive content, tutorials on how to build such a backtest, a statistics library where you can download all of those Excel sheets yourself, even a course on technical analysis dedicated to all kinds of technical indicators. And of course, we've also got a premium chat, a very nice, smart community that helps each other. So if you've got any questions directly to me, simply feel free to ask them in the premium chat. Now, besides all the paid content, I of course will still continue to publish free videos here on YouTube. So don't forget to subscribe here. You might also consider joining our free Telegram group. Simply search for Bitcoin Strategy Channel within the Telegram app. Last but not least, if you're interested in a relative valuation comparison of Dogecoin versus Shiba Inu, then don't forget to check out this video over here. There's a lot of value there as well. So see you in that video and thanks for watching this one. Bye bye.